All right, the reason you are not profitable is because you are trading using just price. You are not implementing time. There are two aspects of trading, there is time and there's price, and many people forget to combine the two or use both. So let's talk about how you can do that. Let me just move my webcam. Okay. Holy shit. Okay, so price, obviously, you think about the fair value gaps, the liquidity sweeps, everything I cover, et cetera, et cetera. We're tapping a fair value gap, we're respecting a fair value gap. Like you go to, yesterday's trade, and you go over here. This was the trade I took. We made a BPR 15 minute, and I waited for a tap of the 15 minute, and then we got a 1 minute inversion right here, and then I took it and I banked, right? So obviously, many people would look at that and they would think, okay, whatever, like that's literally just a regular ass fucking trade. But what they don't realize is the time aspect of this trade. So let's talk about what happened. Right here, we are chopping and doing basically nothing. Literally just accumulating. We're not making a push to a liquidity pool to the upside. We're not making a push to a liquidity pool to the downside, not even this low. We are not looking to do anything of value or substance at this time. So right here is an indicator called, I believe it's ICT power of 3 by 2 degrees, but I know it's by this guy right here. So 2 degrees here has higher time frame power of 3. That's what it's called. And that's this indicator right here. There's no like special settings except for the time frame. You can switch it from 30 minute to 4 hour, which I'll get in a second, but we'll stay at 30 minute for right now. Why? It shows here the body and the wicks of the candle presented. So as you can see, it's 10:29 right here. So what's about to happen? We're about to open up a new 30-minute candle. And this is where time gets important. You look at a candle, right? A candle has a top wick, a bottom wick, and a body, right? So this is a regular candle. The top wick represents the highest point that we got to, and then the bottom wick represents the lowest point that we got to. And then the body is obviously where we started and where we closed. If it's a bearish candle, we would start here and close here. If it's a bullish candle, we would start here and close here. So that's how a candle works. Now, the real important thing to note is that especially during a volatile session, we are going to make a top wick and a bottom wick on every major candle. That's why if you have this ICT kill zones and pivots indicator, you can see what are the major liquidity sessions. Okay, there's Asia session, which is, as you can see, 8 p.m. to, I believe, 12. Then London session, which is 2 a.m. to 5 a.m. And then New York AM session is 9:30 to 11. That's the session I trade. There's also lunch, 12 to 1, and then New York PM 1:30 to 4. So those are the most volatile sessions. So in those sessions, those higher time frame candles are typically going to make a top wick and a bottom wick. So what happens right at 10:30? Here's the new candle here. As you can see, this bottom wick is very, very, very inefficient. It's not a big wick. You look at the bullish move that we have made so far in comparison to the small bearish move, that is our wick. So do you think this is going to be the lowest that we possibly go in the next 30 minutes? I don't think so. And let's say it is, then we'll just continue pumping and we just won't get a setup anyway, right? So I want to see an actual efficient bottom wick get put in this new 30-minute candle. So now I've gotten that 15-minute and I've gotten my inverse, which is my entry, and I can now combine that with the fact that I think we're going to make a new low. Remember, this is the low of the 10:30 candle open on the 30-minute. That's why on the indicator I have it as time frame being the 30-minute, because you can see the 10:30 open. So this is representing the 10:30 to 11 candle on the 30-minute time frame. And as you can see, we immediately make a new low. What do you know? We get a little pullback. Now, doesn't this wick look a lot more efficient and accurate for the 30-minute candle? So another aspect of this is a concept that I talk about all the time. Like I said, we accumulated beforehand and then we manipulated. AMD model. We accumulate and then we manipulate to the upside and then we distribute to the other side, and then obviously, I don't even fucking have this. So obviously, what's it called? We could do either, we could have manipulated down to like an hourly gap below and then gotten longs up to the 15 minutes, something like that. So it can go either way. But the important thing to note, let me make sure my mic is working. The important thing to note is that most of the time before a major candle opens up, we are going to see some accumulation, because when that new candle forms, we must basically decide, are we going to make a bottom wick or are we going to make a top wick, or bottom wick, top wick? Which one are we going to do first? Which one are we going to follow through on? Where's a liquidity pool nearby both? If there's a 15-minute fair value gap or an hourly fair value gap up or below. So overall, when we see these new times start to come about, so I would say 9:30 open. That 9:30 candle is very, very efficient. You saw that here. We accumulated pre-market, didn't really do anything. And then I didn't take this trade because the gap was was not discounted enough for me, but it was a valid trade. We manipulated into an hourly fair value gap that was over here, and then a lot of people took this. You got an IFEG out of it, and then we made our top wick. And then you seek out, liquidity as a target. Very, very simple trade. So, remove these. So, that would be an example of 9:30. Then at 10 o'clock, what happens at 10 o'clock? Well, we're accumulating beforehand at 10 o'clock. As you can see, where is 10? Well, we shoot down, and we make our bottom wick for 10 a.m. So, let me actually open up the 4-hour chart. Oh my god, this is so fucking annoying. Okay, so now we have the 4-hour time frame. We go over to 10 o'clock open. This is the major one I want to talk about, because obviously there's a 4-hour candle. The futures market opens at 6 p.m. on Sunday. So there's one at 6 p.m. Sunday, then 10 p.m., then 2 a.m., then 6 a.m., then 10 a.m. every single day. So 10 a.m. obviously is when the 4-hour candle opens during the most volatile session, the New York AM session. So it's something that is very, very important, right? So here is the 4-hour. As you can see, we made a move up and made a top wick. So now we start to sell off a little bit. There was no really efficient trade here, for yesterday at least. But if you go to my journal, let's see. I know there's a 10 a.m. I think this was a 10 a.m. trade, but I want to see a better one. The AMD was too early. Have to sell off. Dude, I'm actually geeking. I think this was at 10 a.m. So we accumulated at open, and then we sold off. And then right at 10 a.m., what happens? We continue to sell off here into a 15-minute fair value gap. We get an SMT, and then we get our entry model, and then we get a long. And I was in and out of this trade in literally a fucking second. Like, I literally entered, and I was like, all right, I'm in here, and I'm out there. And as you can see, what happens after? It continues to pump up. We continue to make our top wick because our bottom wick has already been established. That is how you combine time and price, okay? Because you could enter a pretty solid trade, a pretty high quality trade, but you will be doing it like right before the 10 a.m. candle opens, and you could get manipulated out. Or you could be taking it, at 10:48, just a random time, and maybe volatility isn't there for you, volume isn't there for you, and you're not getting momentum to those liquidity pools. But when we open up new higher time frame candles, like the 9:30 open with a new 30-minute, or the 10:30 with a new 30-minute, or of course the 10 a.m. with a new 4-hour, or even 11 a.m. with the new hourly candle, you're going to see price is going to want to do what? It's going to want to rapidly start to move towards liquidity pools. And then, what do we do off liquidity pools, aka price targets, like fair value gaps and highs and lows? Well, we typically react off of them. So, if we have a 15-minute fair value gap above, and we're chopping around before a new candle opens up, right when maybe 10 a.m. or 10:30 a.m. opens, we could see manipulation, and if you get a reaction out of it with a fair value gap or your entry model, maybe it's a CISD, maybe it's a fair value gap respect, maybe it's an IFUG, then that is your cue to take it. All right. So what I was doing a lot in the past was I was just strictly trading price. I was just like, okay, if we respect this hourly gap and we get an inverse out of it, I'm going to take it. Not realizing, okay, this is, we haven't actually made a bottom wick or an efficient bottom wick on the 4 hour or on the hourly or on the 30-minute candle yet. So this indicator has helped me a lot. I was able to go 3 for 3, catch 3 bangers. And another important aspect is I want you to look at my last 3 trades. This is where I entered, this is where I got out, no drawdown. This is where I entered, this is where I got out, no drawdown. And then this is where I entered, this is where I got out, no drawdown. There's no drawdown on these trades because I'm combining price and time, and if you're getting in at the right time, then immediately the volume will flush price to those liquidity pools because they're supposed to happen at these major or volatile times. So that's why timing can be so impactful, because you could have the right idea on a trade, or you could be using the correct PD arrays, but sometimes it won't deliver because you're just entering too early or you're entering too late. So master these 10 o'clock, 9:30, 10:30 opens. Notice how price can accumulate, then manipulate up or down, and then distribute or reverse to the other side. And then once you can combine the AMD time aspect and opening bodies, bottom wicks, and top wicks, and then of course your entry model and price liquidity pools, you're going to start seeing some bangers, and not only just winning trades, but winning trades that happen and get you in and out almost immediately. So that's the power of combining time and price. Make sure to back test this and try it on your own next week. Really just be very, just be thoughtful of what time you're entering trades or what time certain things are happening, because I promise you, and I post this a lot on my Instagram story, a lot of the same setups happen at the same time almost every single day. A lot of the trades I take, I like to say trading should be boring and repetitive. A lot of the trades I take are the same exact trades, and you go through my trading draw, and it's like, oh wow, shocker, he took a 15-minute respect at 10 a.m. that did AMD with an IFUG. It's the same shit every single time, and that's good. That means I'm executing a system, and that means that it's profitable. So continue to repeat a very easily repeatable and proven profitable system, and you will see rewards.